Hi and welcome to the Market Alert for Wednesday, the 14th of September 2022. So US consumer prices blow away expectations, rise for the 27th straight month. Yesterday, it was a bit of a shocker, I have to say. Everybody was expecting the CPI numbers to have actually moved lower a bit, but they certainly didn't. And the core CPI was the kicker. Hot CPI sparks market turmoil, 100 basis point rate rise odds spike, and US stocks suffered a bloodbath after hot CPI number. And this is the news all the way. Dollar soars as SPX posts worst day since June 2020 after hot CPI. And there is no good news across this report. Shocked Wall Street reacts to today's scorching CPI print. And an ocean of red. I like that, where you've got Biden doing a selfie in front of it. That wasn't supposed to happen. It certainly wasn't. I'd say the expectation was different, and panic is here is the final headline selection this morning. So yesterday, let's just go back a day and have a look at the CPI numbers. Here they are. And it was the core one that was the major one, because it actually gone up by 100% year on year, and that was the main reason for the decline in stocks. Also, the CPI was actually up as well. Previous was 0 and it gone up 0.1%. So yeah, that was the issue. It was the core CPI number. And today, of course, we've got UK. I wonder if we're going to get the same surprise at 7 a.m. It'll probably be out before you get the market alert. 10.1, previous 10. I don't know how on earth they can come up with 10, frankly, given the rise in energy prices. But we'll have to wait and see, won't we? RPI is the one I always like to have a look at as well. That's running at 12%. You'll notice that's never mentioned on the TV anymore. It used to be, but now that's tucked away because of obviously it's higher. It always comes out higher. So HPI as well, 930 house price, showing another increase in house prices. We'll have to wait and see on that one. And then we've got PPI from the US at 130 as well, and that's likely to be inflationary as well. So there we go. Gold-silver ratio yesterday moving back to the upside as it is overnight as well, which you'd expect. We've got support down in this area here, so no surprise there. So let's kick off and have a look at the market's reaction to this yesterday. So you can see the Dow, a massive drop there yesterday, down to 89%, or just below 89%, nearly a double bottom actually. Finding a bit of support overnight at the 89%, 31,159, and the 30-minute chart. Let's have a look and see what the damage was. So the Dow down 651 points there for the total of the news, including the news there at 1:30, and then even during the trading session, you'll see the market dropped 870 as well. So a massive move. It continued basically with more or less the same amount, 1,600 points on the day, but a huge drop yesterday when this was announced. And the market finding a bit of support at the moment. But yesterday's low is going to be very important, because if this is taken out, then we will see prices continue to the downside. Just move this over so you can see, because the Dow's been quite strong actually. It hasn't traded back down to the lows like the DAX, which we'll look at in just a moment. So a break below this low will see us heading down to these areas of support. So let me just draw in a set of fibs here. This will be the sort of area that you can expect. We've also got 78% at this area as well, which is probably why the market's holding at the moment. In the German DAX, you can see prices sideways to lower yesterday, and I'm just looking at the bigger picture here because we've marked up here back to here, and we've got the 89 there that we had. And again, looking relatively strong compared to the Dow, sitting at the 5 and 20 bar moving average overnight. But a big move for the DAX yesterday as well. And let me just add in this from here to here. You can see that we're back at 50.62 at the moment, so an important area of support. The 30-minute chart, again, you can see that the market fell out of bed on the news, and prices down 505 points after the news came out, and then the conclusion of the US trading session last night. Again, watch this low, very, very important, and also watch the 13,000, which is this one here, very important. We've come back, like I say, 500 points in the last, or within the last 24 hours, and you can see there that this low and the psychological low of 13,000 is going to be very important for this market. In yesterday's 5-minute charts, let's just squeeze these up a bit and move it over. You'll see there the carnage in a second. There's the inside of the market, and then the market continuing to move to the downside. I actually traded the short side after the news and managed to get a few quid out of the trade using the smaller time frames to keep the risk small. And this week, the week so far, let's have a look, as I've been on other jobs as well, is 25145, 2.76 on the profit factor, and 55.45 as the market's been fairly quiet till we had the activity yesterday. But nonetheless, profits are profits, and hopefully take advantage there. But I'll certainly be looking at the low of the German DAX today and the Dow, keeping that in mind, and particularly the 13,000 for the DAX, because that's a major psychological level. Overnight prices gapped. As you can see here, we had the gap that's been filled, and it's this low. You can see what happened earlier hours. The market has moved off this, and you can see there's the low, really important. You see how it managed to get back above that. So any move to the downside, watch the low, and then below this you've got the 13,000 level, which is this one. So 100 points away on the downside at the moment. If they take out the low, they're likely to bring it back again and try and hold. But if it breaks convincingly, then watch the 13,000, and the 13,000 will also be an attempt to bring it back. It'll have to go through a second time. That seems to be the pattern for the German DAX. And in the S&P, you can see the market trading back to the 89, 78, 89 area yesterday. We're more or less overbought in the daily chart. 30-minute, you can see the effect there, and it continued lower. Again, watch yesterday's low for this market also. In the FTSE 100, you can see the market finding a bit of support. It's still looking very strong compared to the other markets. These are the downside targets should the market move lower. But again, you'll want to keep an eye on yesterday's low, which the market has already tested. Shows demand at this level to bring prices back, which it's succeeded so far. But of course, it's waiting for the UK CPI numbers today. In the currencies, obviously yesterday the dollar moving sharply to the upside with the CPI numbers, because rates are likely to increase by 1% this coming Wednesday, isn't it? So the yen and the pound coming under pressure, as you can see there yesterday, trading back to the 89% retracement that we've had drawn in this market over the last few days. And in the 30-minute chart, so you can see the reaction there. We shot up and then we moved lower, and we've taken out the overnight low, the 200 MA, but sitting at the S1 there at the moment, which you can see. Pound also hammered yesterday back to a low of, did we have the 114 low yesterday? Yes, 1149 for yesterday for the pound. And in the 30-minute chart, you can see the reaction, and that's because the dollar just shot up to the upside, which again you'd expect because they know rates are going to be coming, or an increase in rates, and of course that means it's positive for the currency, despite the fact that it's lost all of its buying power of some 90-odd% since 1971 when it was removed from the gold standard. So there you can see the pound bouncing a bit because the dollar's down overnight, which we'll have a look at now. So the dollar, let's just kick off with this. You can see yesterday the reaction to the upside, massive, up to 62.78 and down on the overnight, which is why you're seeing the currencies finding a bit of support and moving up. Meanwhile, in silver yesterday, obviously down, which you'd expect. A bit of supply there as well yesterday, so people selling. Holding really well though, considering the big move in the US dollar. And I expect the dollar is going to make an attempt now and run towards that 120 all-time high as well. But silver holding well despite this. So there's the reaction. It was moved lower. But as you can see, this too is finding support overnight at yesterday's low. This is why it's so important to have the previous day's low and high marked on your price charts, because they're so important to all traders, because if the market can get back to these levels and hold at these levels, then they'll bounce off them. Gold also down yesterday, stuck in a sideways range compared to silver. It's unusual to see this because it's normally gold that moves and silver lags, but you can see there the move in silver recently, whereas gold has remained sideways. And the reaction to the gold yesterday with the CPI numbers, you can see how they sold off sharply because of the rise in the dollar. And finally, in crude oil, this sideways to higher also. Okay, that's it for this one. Let's see what happens with those CPI numbers at 7 a.m. and how the market reacts during today, whether there's follow through with the US CPI numbers from yesterday as well. Okay, that's it from me. As ever, thanks for watching. See you in the next one.